Hey everybody, good afternoon. It's about 1 o'clock in the afternoon here on Monday, August 23rd, 2021. What I'd like to dive into the S&P 500. I want to get a real good and clear idea for where it is going, where she is going before larger things happen. Because I think generally speaking, the markets are going to move in a similar direction. We've got the S&P, we've got Nasdaq, we have Russell, we've got Dow Jones. Generally speaking, they all kind of move in the same direction. Of course, you do have money rotation, which causes things to, kind of fluctuate a little bit. But I would say that we can all agree that generally speaking, the stock market moves and breathes in similar directions. So what I want to do is I want to focus on the S&P because right now I think that's the cleanest. I think the S&P is the cleanest count that we've got here, and I think that's important. Before I get into any of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and get into the charts. All right, so what I've got here, I've got the ES. So this is the futures chart that I've got up here, and I'm going to remove that guy. I've got a count. It's very simple, and if you're not familiar with Wave, maybe this isn't really simple for you. If you're not, maybe you should consider getting access to our Discord server where we do have a lot of materials on Elliott Wave analysis. So looking at this, though, we've gone over this in the past. I had a slightly different count, even as close as last week, slightly different count. So what I've done is I've dug a little bit deeper into the chart, and what I actually think we've got going on here is we've got from the lows here. I think this is actually a 1, 2, and then we're working on a much larger wave 3. So that does indicate that we are probably going much higher. And it also decreases the probability that we're going to be revisiting any of these prices anytime soon. Because, again, looking at this on a daily, okay, I'm just going to compress this here for a moment. This area right here, let me just kind of outline this because I think this is important to realize. This area right here in this range, tons and tons of demand, right? So we had a push down, there's demand. We had another push down, popped right out of it, that is demand. And then, of course, we had our overthrow, and then a deep pull, and then a pretty quick recovery to new highs. And that, again, demand. So no, I don't think we're going to see 2,500 anytime soon. There's a number of reasons why. I'm not going to get into them here. This isn't the time to start talking about central banks and quantitative easing and all of that stuff. That's not why I'm here right now. I'm here right now to discuss the potential for where things are going to go when they do finally pull, and it's going to happen. I did get into a short position. I got slightly filled back here on about the 17th, and then, or maybe it was the 18th. It was kind of midweek, and then on Friday, I got all of my fills. So naturally speaking, the market was moving up. Now, the position that I'm in, just to be completely open and honest, is the last Friday in September. We've got, lots of time, like over a month on that. So that's something that's going to take some time to work itself out. And on a simple move down, that will be worth some money and we'll be able to cash that out. In the meantime, yeah, I do think that we're probably going to see new highs based on the price action from today. Last Friday, we were discussing this, and I was taking a fib pull here from the dominant pivot high to the dominant pivot low. Let me change my template on this so that it looks a little bit better here. Okay. Looking at this, we were looking at that 618, but I was ultimately looking at the 786. Now, obviously, we have pushed higher right here. 786, that was at about 44.50. Once we pushed up above that, that was an indication to me that we were going to be going higher, and look and see what's happened the last 4 hours. So we went up there, we had a little bit of consolidation, and it was bullish consolidation. We were also talking last week about support and resistance levels. So I can, extend this out. We can see that that was an area of resistance. Right here, move it over to the right, and you can see that was also an area of resistance, then it became support. Same thing here. This is also true. This is an area that was previously resistance, and now it is support. So I'm going to go ahead and remove these because they are still valid, but they're only really valid, in my opinion, if you're going to be playing some shorter term options or if you're going to be actually playing futures, which I know not a lot of people do. So at any rate, we pushed up above our important area of resistance, and that leads me to believe that we're going to be going a little bit higher. Now, how much higher are we going to be going? Probably not much, okay? At least in the short term. So for today, for tomorrow, I would expect that 44.90 is probably going to be the top. And I do think that we're going to see, as you can see here, I've already kind of outlined this, I do think we're going to see a little pullback, right? I don't think it's going to be significant, right? I think that generally speaking, this area is going to be continued. It's going to continue to be an area of support. So we get this pullback, and then I think we're going to be moving ourselves a little bit higher. So let me go to let's go to a 4-hour time frame here because I want to analyze this ending diagonal. Now, typically, when we have an ending diagonal, we do see an overthrow of the wedge of the diagonal, and that's what I've kind of outlined here. What I think is going to happen. It doesn't necessarily mean that's what's going to happen, but I do think, at a minimum, we're going to be consolidating here for at least a few days. It's going to look, in my opinion, very similar to what we saw right here. We couldn't break through that level, and that level was at about 44.13. And then we broke through it, and then we had a rejection. Then we got down to our support level, and then we started seeing new highs off of that support. I think something similar is going to happen. More than likely, we're probably going to move sideways here for a little bit, but at some point, we're going to have a very similar reaction to what we saw right here, okay? So more than likely, we're going to see similar to this formation right there. And that's probably going to be what's going to take us up to about 45.60, potentially a little bit higher. I want to show you how I got to that area of 45.60. I'm going to use my trend-based fib extension tool, which I use all the time. We have a video inside of our classroom just about using this tool. I'm going to measure, most of the time I measure from wave 1, pull back to wave 2. Sometimes I'll pull differently, but in this case, I'm going to pull all the way up to wave 3 on an ending diagonal, and I'm going to pull down to wave 4, and I'm going to be looking for the 618. That's going to be my target to the upside here. And again, that's at 45.65. So, I could pull this just up just a little bit higher. Not looking to be completely perfect on catching, the top or the bottom or anything like that. But what I am interested in is catching the move, right? Now, I've taken short positions over the last, couple months. And I would say 80% of the time they've worked out. Now, of course, some of them have not. Some of them have not. But I do have several short positions that have worked out. And a lot of people have noticed that we do have a little bit of a trend here. And it's very, very similar to, let me see if I can find it here, time cycles. As far as the timing goes, it's very close. Like if I take this point here to this point here, and then I look forward, we hit, basically we were going down at about the same time, right? And I would say the same thing, I guess really right here it's not, but we have seen lows in a very cyclic manner. And I kind of expect that's probably going to continue. So I point that out because we've got OPEX on a lot of these pullbacks, okay? So you got to be really super careful on OPEX weeks, especially on OPEX day, because what we have seen so far is significant pullbacks. Now, what could happen next OPEX, it could be a move to the upside, a significant move to the upside. It could be completely the opposite. But I'm saying the last few have been significant pulls to the downside, and they typically have been right around weekly expirations. I think it's like the third Friday of each month. But at any rate, keep that in mind as you go through and look at things. Right now, the charts look great, and I don't see any reason why we can't continue to make newer highs for at least another week. Okay, once we get into September, and this is also true from what happened last September. Let's just go back to last September. What happened? What happened? All right, well, here we are. August 24th. Right now, we're August 23rd. Okay? We had a little pullback, a push up. August 23rd, 24th. Big move up, all the way up through Labor Day. And then what happened after Labor Day? We had a significant pullback that lasted 3 weeks of September, was significant pullback. Then we had a big move up, and that lasted until about the 12th. So that was a couple weeks of upward momentum. And then we saw another significant pullback. Lasted until basically Halloween. That's 2 months of chop. Did nothing but move sideways. And right now, I think everybody can agree, everybody's super bullish, and I've said this over and over. Market doesn't know how to do anything but buy the dip. Okay? That's just what the market's done. And you can't disagree with me, because it's like, there's a dip. Okay, we're buying, going up to new highs. There's a dip. Okay, we're going up to new highs. There's a dip. Up to new highs, dip. Up, dip. Move up, dip. Move up, dip, move up. Okay, now, eventually at some point that's not going to work. And that's what you need to be prepared for. Now, I'm not saying to go all in on shorts. I'm definitely not saying that. I would say that any short position that you take, you have to be sick in your head to want to short the market. You literally are asking for the financial system to fail when you're shorting the market. So just keep that in mind as well. As you are looking at short positions, I would say that you need to be reasonable. You shouldn't be doing anything reckless, and you need to have areas where you know you're wrong. And in my case, my risk on my short position, if it goes to zero, it's not going to hurt me. Okay, but I know that I'm wrong if we break up above this 45.65 area. And again, I think it's probably going to hit. I think it probably is. So just take that with a grain of salt. But the downside, okay, on an ending diagonal, typically you go right back to where you started when that ending diagonal starts. And in this case, that's going to be all the way down to about 41.50. A move down to 41.50, and I'm talking about ES futures, so it's slightly different from the actual SPX index. That's a significant move to the downside from the highs. How much of a percentage move is that? Let's try and estimate this here. And it's not being nice. Let me get this price range from the top to the bottom. That is a 9.23%. Now, again, I've been waiting for a 10% move on the market for a long time. Every time I take a short position, this is what I'm waiting for. And, we made a decent amount of money back here in July, made a little bit of money on this move here as well. Ultimately, I am expecting this throw over. I do think it will happen. I'm almost guaranteeing that it's going to happen. We're going to get a throw over. But I'm going to be looking for this to be that last move. And I do think we're going to consolidate, pull back a little bit here, and then we're going to see that thrust to the upside. And again, for the S&P, looking at 45.50, 45.75, somewhere in that area. I don't think 4,600 is going to break, but it might, and it could. And I mean, it wouldn't surprise me, but one way or another, we're getting to that point where it looks to me like this move is nearing completion. And I think that this is going to be a wave 3. Okay, so if I zoom out here, I do believe this is going to be a wave 3. So we've got from down here, 1, 2, 3, pulling back for the 4, and then we're going to go up for the 5. Now, where do I think 5 is going to go? Well, for right now, I'm putting 5 up here close to 5,000, 4,900, 5,000, somewhere in this general area. Is that going to be accurate? Well, what really depends is whether or not this wave count is correct. So again, take dominant pivot low, dominant pivot high, which I believe is wave 1. I was conflicted on whether this was wave 1 or wave A for a long time. I think at this point it can be considered and should be considered a wave 1. And then we go down to the bottom of the correction, wave 2. So wave 3, about 5,500. Okay, so we've got this 1, 2, 3, 4. A move to 5,500 would be a pretty significant extension. Now, I'm not on log scale. If I move this to log scale, things do change quite a bit, and I think it makes it way out of proportion, and I don't think it's accurate to do that, because a move to the 1618 would be $7,200 or 7,200 on the index. That doesn't make a whole lot of sense. However, 5,500 does. I can see that. I can see this wave 5 being an extended move up here to the 1618 to the 175. We're talking 5,500 to 5,700. 5606 is right there at the negative 1236. There's a lot that's telling me that that's, there's a high degree of probability that's where we're going to be going. But now we're also talking about potentially over the next year. Okay, so we're talking about going all the way out into 2022 for that wave 5. So that's going to take some time for us to get to that wave 3. Of course, after that, if this is in fact a 1, 2, then we finish the 3, pull back for the 4. Well, our wave 5 target is going to be sitting here between 67 to 69, so almost 7,000. Now this, in my opinion, would be a 5 to 10 year projection. A 5 to 10 year projection. And this is all based off of, and again, I'm not going to get too deep into it, but this is all based off of the fact that I do believe that central banks are going to start printing more money, doing more quantitative easing. So that's kind of where I'm at. I think interest rates may go negative at some point, but real interest rates are already negative anyway. If the bank's paying you 1% on your savings, which is absolutely ridiculous, you're literally losing money every year because the dollar is becoming less and less powerful. And the housing market is a really great example of that. I'm not going to get into the housing market right now, but I mean, their prices are increasing, which means if you have $100,000, you can buy less of that house now. Versus a year ago, if you had that same $100,000, you could have bought more of that house. Maybe you could have bought the house outright. Right now, the way the market is, it's not true. Equities, really great example. Look at the chart right here. A lot of people are taking their stimulus and they were investing in the stock market. Well, that's worked out pretty well. When money gets printed, equities, general equities, you think the basic stocks, you've got like Caterpillar, you've got other stocks as well, Walmart, Lowe's, Home Depot, general stocks are going to keep pace. Only certain stocks are going to outpace. Some of them you get lucky with them, right? Some of them you have to make a calculated risk. And if you're on the Discord, you know what my calculated risk is going to be. I'm waiting for the flush, which I think is going to be this wave 4. I'm waiting for the flush, right? I'm going to say it again. I'm waiting for the flush. I've got a small bet that we're going to get it, but I'm waiting mostly in cash for this flush. Then I'm going to be picking up some long-term positions. And I think it's going to work out again over the next 5 to 10 years. It's going to take time. This is all based off of the pullback that we had in March of 2020, then the run up, and then the pullback and correction here in September and October, which right now really looks minuscule in the grand scheme of things. This doesn't look like hardly anything, but at the time, it was very hard to make money during these 2 months. But here we are. We're at new highs. We're at new highs right now. We're at new highs today, at least. We're starting to see just a tiny pullback, nothing significant. But I do think that we are, over the next couple of days, we're going to get a little bit of a pullback. We're going to get a throw over, right? And my throw over target is going to be sitting there at about 45.50, 45.65, somewhere in that area. And then we're going to see that pull back to, in my opinion, about 41.50. 41.50 is where I think we're going to go. I think that it's possible that it lasts the entire month of September again, right? It's important to keep that in mind, that the correction is not going to happen in a week, right? This isn't February and March of 2020. I mean, if that does happen, then great, because that means I'll be able to cash out of my short hedge much, much sooner. But ultimately, once we hit that target, I'm going to be out of my short hedge, and I'm going to be looking for those long-term positions as long as the indicators make sense. The indicators, as long as the indicators are telling me that it's time to make sense. And speaking of the indicators, I really haven't pulled them up here. You know, we had a buy signal right here in a bull market, buy signal down here, and it worked out. I mean, it worked out really well, right? So that's a move to the upside. Now we've got the 1 hour and the 3 hour that are both overbought. So that's why I'm thinking we're going to get a little bit of a correction, but it's not going to be a significant one. That 12 hour is curled up. It's moving up, rightfully so. And so that's why I think we're going to get this little bit of a pullback, insignificant. What is more significant is the throw over target. And once we get up here, what I'm expecting to see is the 1 hour, the 3 hour, and the 12 hour all in overbought conditions at the same time, which is setting us up for that pullback. And I haven't decided whether I'm going to do it or not, but I may actually increase my short hedge if and when we get there. Okay, I do think we'll get there, but looking for that pullback, then you will retest, a bearish retest of the wedge, and then we have that last, in my opinion, that last sell-off down to, again, about where we started. I would say that we should at least go back to this level right here at about the 4150 level. All right, I suppose we can talk about Nasdaq. Again, I'm kind of expecting similar, right? So I've got a lot of levels on here from trading, but you know, we've got new highs right now on Nasdaq. I don't really have you know, any bearish stance on this. Looking at the indicator on Nasdaq, and again, these levels are just important support and resistance levels. Again, we've got the 1 hour, the 3 hour up and overbought. The 12 hour, it's moving up. So I would say that dips should be bought right now, and a pullback to the highs, right? So at about 15,150, 15,200, one of these levels here, I think those dips are for buying. Excuse me. I do think those dips are for buying, and I think we should take advantage of that if and when we get there. But again, a pullback and then still a move to new highs. And even though Nasdaq doesn't have the same chart formation that the S&P does, it still does look like we are getting close to this 15,750 area on Nasdaq. So that's where I had been eyeing 15,750. It's very, very likely that hits. And again, you can see that I've got a count out here. This bullish invalidation is all the way from March, but this still looks okay. I'm not concerned about Nasdaq at all. All right, the last thing, excuse me, Bitcoin. What does Bitcoin look like? Let's see if I can find the chart that yeah, I think this will do. Actually, I really don't want to use this chart. Let me see if I can find it. I think it's on Coinbase. Yes, here we go. Okay, so on this, let me remove this. Again, if this is your first time watching, I do want to point out that all the videos I do live. I don't prepare anything ahead of time. So if you see me kind of fumbling with a chart, it's because I really haven't done anything with the chart in a while, and so I'm just refamiliarizing myself with what I had put on the chart in the past. All right, so I think we can all agree that this first correction is done. And I think we can also all agree that we had an ending diagonal, okay? I think we had an ending diagonal right here, 1, 2, 3, 4, 5. Sound familiar? So we had this ending diagonal. We had the pullback and the retest, and then the sell-off. Well, what happened? We came back to where this ending diagonal started. Wave 1 is starting from down here on the bottom of this wave 4. Big wave 1, 2, smaller wave 3, 4, smaller wave 5, right? We talked about this last week. Wave 3 wasn't the longest, but it also wasn't the shortest, right? Wave 3 doesn't have to be the longest, but it can't be the shortest. And it's also important to note, again, what I mentioned with the S&P 500, we had the ascending diagonal. We started the pullback, retest, and then we came back right to where we started. Okay? And this was my basis for saying that we should be buying below 30K. I was telling everybody on the Discord, buy Bitcoin below 30K. I was looking for support at 28, to be fair. But buying below 30K made sense. It made a lot of sense. And this is the reason why it made sense to me. So now that we're sitting up here, we were up above 50,000 earlier. Are we almost done? Well, again, I believe that it's very possible that Bitcoin goes to about 52. It's possible that it goes to 60, but I'm starting to doubt it. What really matters, and I'm going to go to an hourly time frame here. I'm going to look at the waves indicator, okay? Looking at the waves indicator, we've got the 12-hour that's getting ready to cross bearish. We've got the 1 hour, the 3 hour, both in overbought conditions at the same time. In my opinion, this is not an area to be longing. If anything, I would be interested in shorting. What I'm not certain of is if this is an A, B, C, which would make this kind of an expanded flat. You know, we would have to come pretty deep here, down to about 45,380. And we can't go any lower than that. If we go lower than that, then more than likely we're going to be finding ourselves back down below 40. I don't think that's going to happen. What is possible here is that this is actually wave 4 over here. Taking a look at the wave structure, we had a push up and a pullback, right? We had a long correction here for wave 2. So it would make sense that this would be a short correction for wave 4. It would make a lot of sense. Okay? So that would assume that that correction is done and we are actually in the middle of a 1-2 right now, which I think is probably more likely. Okay? So if we've got a 1 working on that 2, potentially coming back down here to 47,000, I would say that we are probably more than likely going to find ourselves up here in this area. Now, again, it's possible that we stop here between 50 and 52, but it really honestly would not surprise me one bit if we found ourselves up here at about 60. Okay, let me get back on log scale here. 59,200. That's going to be the 887. Let's see where the 786 is, because I think that's also important here. Let's see where the 786 is. So the 786 is sitting here at about 54,540. Now, a lot of people were talking about the 618 at 47,582. Off of log scale onto arithmetic scale, that's at 51,109. All right? So we're at significant areas of resistance. I would say that naturally we should get a rejection where we got it. Okay? Again, significant areas of resistance are overhead. Layering into a low leverage short probably makes a whole lot of sense. I would say that sometime in the next couple days, and I've got this outlined here on actually at the end of the month, August 29th. Potentially we could be continuing to run up, maybe even up to the 57,000 area, all the way through the end of the month. And from there, I expect September in crypto. I do expect September to have a little bit of a pullback. September is kind of alternate. September 2017, pullback. September 2018, I believe, was trending up at the time. But anyway, I think that this September is going to be a pullback month. And that kind of aligns with my stock market sentiment that more than likely in September we are going to see a pullback after we see a push up, at least in the stock market and in general equities, a push up to new highs. So Bitcoin doesn't have to make new highs right now. Bitcoin just needs to continue trending higher, and it looks like it will. So far, I see no reason to believe that we are going to be pivoting significantly to the downside. I still think that we're probably going to make new local highs, finish this wave B, then we can cash out. Let me go ahead and remove some of this because this was from a long, long time ago. Finish that wave B, and then we can go to wave C. And this wave C, when we see this correction, this is going to be a significant buying opportunity. No, I don't expect it to go to 20,000. Right there, about 24 is where I'm kind of expecting this guy to go. I'm expecting Bitcoin potentially go down here to 24 to 25,000. And if we get there, I'm going to be an aggressive buyer. And I think I used those same words last week as well. I'll be an aggressive buyer if we get down there. Now we don't have to get down there, and I'm okay if we don't. But if we do, I'm going to be an aggressive buyer because, again, the next 5 to 10 years, I think Bitcoin, Ethereum, Chainlink, Cardano, I think those are going to be a safe haven, or a version of them, right? I think it's more of a risky safe haven, but I do think they're going to be a safe haven against inflation. I think they are going to outpace inflation. So, diversification is key, as always, with everything. I talk about that in all of my classes. We talk about diversification. It's very important to do that. It's not wise to put all your eggs in one basket. You need to diversify a little bit and go from there. All right. Well, I've been going for about 30 minutes here, talking about all of these lovely, lovely markets. If this video did help in any way, shape, or form, like, subscribe, share all the good stuff. If you need access to our Discord, BitDoctor.org. There's a link in the video description to get access. The community is free. We've got some paid options in there as well, where I'll share some trades and things, and there's a lot of really great people in there sharing trade ideas all the time. If you need access to just our indicators, you can see information about that on BitDoctor.org as well. All right, guys, and you know the deal. Wherever you are in the world, I hope you're having a good day, a good night, and a